Hello everyone. In this video, we're going to go through homework sum 1 briefly. The purpose is to help you understand and get the homework down. All the numbers illustrated in this video are different from the actual numbers recorded by the sum. Okay, be careful. Alright. So we know that budgetary system is used as a control mechanism for government agencies. Alright, so transaction A. Prior to the start of the year, the agency is going to adopt a budget in which we have revenues and expenditures. Okay, so we're going to set up the this budget in this transactions journal entry. So we're going to debit the estimated revenue, for example, 100. Okay, and this estimated revenue is a total revenue to be collected. Okay, to be collected. It is not an actual revenue. Then the next year, we're going to recognize actual revenues on the credit side. Okay? So the remaining debit balance in this account reflect the revenue to be collected. So we set up estimate revenues, and we're going to credit. We're going to credit the expected expenditures, which is appropriation. For example, 90. We expect to spend 90. The difference between the revenue and expenditures will be the expected fund balance. The budgetary fund balance. This differentiates the actual fund balance we have. 10. Alright, so during the year, the agency had the following transactions. It's part B. First, right, it collect fees, which is revenue. So if collect fees, it's increased revenue, so we debit cash, for example. That's 100. Yeah, and 100. Maybe more. Let's say 120. Then credit revenue, 120. So collect more revenues than it has expected. And also order goods and services. Okay, then except in special circumstances, the agency will use encumbrances. Okay, account. The encumbrances is used as a assigned fund balance. Basically, we're going to reserve or put this fund aside for future expenditures. It's assigned. Therefore, we're going to use encumbrances account to record the reserve fund. So we debit encumbrances. For example, expect to contracts as 50, right? Ordered service. Then we're going to credit. Remember, we're going to put the fund aside. So this is the reserve for encumbrances. The reserve for encumbrances is assigned fund balance account, assigned fund account in the balance sheet. So it's part of net position, but assigned. And this encumbrances is going to reduce my expenditures. Remember, the total expenditures will be the appropriation account, 90. Then I sign a contract for 50. So I used 50 out of 90. So the remaining balance for spending will be 90 minus 50, or 40. I have 40 for spending. Okay, this is what is this budgetary assistance is intended for. All right, let's continue. So, right, during the year, right, the agency received 40 service. Okay, received 40 service. So we're gonna record the transactions. So received 40 service and paid 40. So we're gonna debit expenditure. 40 and paid cash. Right, 40. And meanwhile, we're gonna also adjust the reserve for encumbrances and encumbrances account, because this has been fulfilled. 40 has been fulfilled. So I'm going to reverse this second journal entry. Debit reserve for encumbrances 40 and the credit encumbrances. So the net result is the 40 encumbrances, right, turn to be my expenditures. Expenditures also reduce my future spending, right? Expenditure reduce my appropriations. Also encumbrances reduce my appropriations. So after transaction 3, my remaining balance to spend will still be 40. Will still be 40, right? I have 10 remaining balance for encumbrances. I have 40 expenditures. So remaining money to spend is 90 minus 10 minus 40. Score equals 40. All right. So 10 is still reserved. 10 is a remaining balance for reserve for encumbrances. Right? This is for future expenditures. All right. So we're going to move to the next transaction. Which is part 4. Right, the agency also incurred other expenditures that had not been encumbered. So that's fine. So these are will be the expenditures directly. So let's debit expenditures. Let's say 30 and credit cash 30. All right. So this is all the transactions the agency had during the period. The next part is C is going to prepare the year-end closing entries. Right, in the year-end closing entries, we're going to close all the budgetary accounts, and we're going to record the actual revenues and actual expenditures, and then get the fund balances. Okay. So first, I'm going to close the budgetary journal entry I did in part A. So I'm going to debit appropriations. Which is, I think I did appropriations. Let's check. Right, 90. Okay, and I'm going to credit the estimated revenue, 100. Then the debit, right? The budgetary fund balance. So all the budgetary account has been closed. Next, I'm going to close all the revenues and expenditures, and get to the fund balance. So let's check what is the actual revenues and expenditures we have, right? So we have revenues 120, which will be closed, and we have the 40 expenditures. It will be closed, right? And what else we're going to close? We're going to also close the 30 expenditures. The total expenditure will be closed, will be 70. Revenue 120. Alright, so to close revenues, I'm going to debit revenues 120. To close expenditures, I'm going to credit expenditures 70. So if there's no other things, we should end up with fund balance 50, right? But we have something else, remember? Because we have encumbrances. We save the money for our commitment. Okay? We had encumbrances 50, then we fulfilled contract by 40, so there's a 10 remaining balances in the encumbrances. So I'm going to also close these 10 encumbrances in this closing journal entry. So encumbrances has a debit balance, so I'm going to credit encumbrances. Alright, then the remaining balance, right? The remaining balance will be fund balance unassigned. So I'm going to credit fund balance unassigned, which is 40. Now, so far, all the revenues account has been closed, no balance. Expenditures closed, no balance, right? Encumbrances closed, no balance. So what we still have balance is cash, right? We still have cash balance. We have these fund balances unassigned, right? And don't forget, we also have this reserve, the reserve for encumbrances. We still have 10 balance available. This is a fund balance assigned account. Reserve for encumbrances is part of the fund balance assigned account. So once we understand these, we can do the part D, prepare the balance sheet showing the asset and fund balances. All right. So you're gonna finish the title of the statement, but I'm gonna skip those parts. So what I'm gonna report is, right, assets. Right, we have assets, we have a deferred outflow, we have liabilities and deferred inflow. Then the fund balance, we don't have those deferred items, and also we don't have any liabilities. So that makes things much easier. So we're gonna have report the cash, the only asset we have, right? So remember, how many cash do we have? If you keep the cash T balance, T account, it's easy to know how many cash we have, right? So if we have the cash account in the ledger, right? So we debit 120 and we credit 40. Then we credit another 30. That's basically, now we know the cash balance. We debit 120, we credit 40, we credit 30. So we should have a cash balance that is 50 balance. Report 50. Because we don't have any liabilities, so we're going to report the fund balance to show the 50 balance. Amount of 50, we have unassigned, right? 40, that is closed from the closing entries. We also have these reserved for encumbrances, which is assigned balance. 10. Okay, and that's it, right? This is for part D. And for part E, the company, remember there's a 10, right? Remaining contract to fulfill. So when the 10 order has been delivered, then we're gonna do the following transactions. First, we're gonna reset up the encumbrances. All the encumbrances from the previous years has been closed. So we're gonna reset up the encumbrances at the beginning of the new year. So we're gonna debit encumbrances 10. Okay, and we're gonna credit fund balance unassigned. Basically, this reversed the closing entry we did in part C. Alright, once we have the encumbrances set up, then we can record the journal entry for the remaining contract fulfillment. So we debit expenditure and the credit cash. The remaining contract is 10, but the actual cost could be 12 because price has increased maybe, but that's fine. The 2 will be extra expenditures that has not been encumbered, or the actual expenditure will be smaller than the 10, but that's fine. But we're gonna reduce all the encumbrances now because the commitment has been fulfilled. All right. So we're going to debit the reserve for encumbrances, which is assigned fund balance. We reduce assigned balance and we reduce encumbrances. Okay. So this doesn't matter whether our actual expenditures, whether it's 12 or 20. So the only thing we're going to reduce is a 10 reserved for encumbrances from the previous contract. All right. This is all we have for the first homework sum. So let me know if you have any further questions, and enjoy watching. Thank you.